Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. And the title of the article is "The Fed has monetized all treasury insurances in 2020." Look at this here. Isn't this interesting? This is this graph through here is really interesting to me. You can see that the blue line here is the bottom 90% earners, okay? And this is obviously when Nixon took us off the ends the gold standard. Basically, it's no longer pegged to the US dollar. And then the bottom, you can see that this sort of orangey, sort of brownie line is the bottom 1% earners. And you can see that ever since 1970, incomes have pretty much sort of stayed the same, pretty much roughly. They've been sort of just going sideways, even slightly dipping now. This is actually in 2010 as well too, so I'm not exactly sure where it is right now. I'm pretty sure it would have been much higher. But looking at there, right, you can also see that the upward slope since 1970, the top income earners did that. Now I wonder why that is, right? Because obviously when Nixon took us off the gold standard, guess what happened? Printing press started happening. When the printing press happened, guess what? Inflation, bubbles in asset prices where most people don't have that. Now, the bottom 90% earners can do that if they want to, right? They can start to take, 5% of their wage that they earn and they can go buy some stock if they want to, but they just choose not to. So, so really they can start to become part of the pie of when people start to make money. It's like, oh, the rich get richer, the poor get poorer. It's like, yeah, well, maybe if you bought stock at $90 10 years ago as well too, you know what I'm trying to say there, right? So that's what I'm seeing through there, guys. Also, what I'm seeing here as well too, look at this here. Isn't this an interesting chart? This is the wealth gap. This is the bottom 90% of the wealth gap. But look what's happening through here, right? We can see here the bottom wealth gap. This is back in 1999. This ends here around 2013. It's actually a lot sort of worse through here. But there's a massive gap right now where we are. This is 2013, but right now, 2020, there's a massive gap from the bottom 90% and the top sort of 1% through there. And that wealth gap will start to come back into play. Well, I'm hoping so anyway. And the last one that I want to share here is this is the one that's really interesting. Look at the Fed's balance sheet versus the Treasury debt. Absolutely crazy, right? Now, this is an up-to-date chart. We can see here back in March and April, it absolutely exploded. Absolutely exploded. Now, guys, this is not going to end well. This is going to be devastation to the max. Why? Because the Fed has now gone from about a $1 trillion in deficit to $4 trillion in deficits. That's crazy. Absolutely crazy. So people that have these government jobs are going to be on rocky roads. Pensions, healthcares, hospitals are going to be all affected by this. They will be. And if you're thinking that, the last sort of 20, 30 years how the government has had pensions and all that sort of stuff and to help you out, it's probably not going to happen. Right, because of what's going on in the markets right now, and what's going on in this overall economy, because this is just crazy, right? Just imagine, guys. Just imagine we start to get a little bit of inflation over the next couple of years, and the interest rates have been forced to raise up. Guess what's going to happen to the US debt? Big, massive default, right? They won't be able to pay it, right? It's all going to come crumbling down big time. The only reason why they're printing so much right now is because of 0% interest rates.